All right, folks, welcome in to our first look inside the updated dashboard of our crypto trading bots, which we're calling Crypto Hedge Pro. And we're going to talk about what the backtests mean, talk about the portfolio of bots, talk about the individual bots, talk about new strategies that I want to be added, and then also timeline and plans for bringing this thing to market. So let's start with the overall backtest. And I've asked Hire, who's the dev. I'm gonna call him Hire. Hire's the dev. Um, and our to update this because this is I know a lot of y'all are gonna see max drawdown 99% and want to run the other way. I'm gonna explain what all this means, and how the backtests are generated. But spoiler, I'm not trading with 99% drawdown risk. He just likes to normalize it to that. Um, but our relationship is a lot of the strategies are my ideas or based on my ideas. I'm very strong conceptually. I understand fundamental concepts about what should work. That's been a gift my whole life is I'm very creative, but I'm not very technical. I don't have the patience to do the code. I don't really want to. So this is a good partnership where Hire programs the bots, and that's all he has to do, and develop this dashboard. And all I do is come up with strategies. And then I'm also like the public face, customer service. I'm here talking to you while Hire's in the back setting these things up. Anyways, so his the way he has set it up is non-compounding. It doesn't really make sense, and I've asked him to change this to a way that does make sense because it's not normal. But essentially, his has it set up so that the equity return, it doesn't even look at equity. It's just percentage, and the percentage is additive and subtractive. So every loss is -1, and every win is +1 or +2 or whatever. So for a max drawdown of 99, it's means that like when it's down 98, the next trade is still -1. So essentially it's risking half of the equity on the final trade here, which it doesn't make sense. And it would risk 100% on the final trade. It's so that the equity curve will look something like this. The scale is going to be different though. It's also even if we're up 100 like 10x, which here it's showing over 7 years, it's up 10x. The portfolio, a win is still just +1. I mean, 1,000 is just brings it from 1,000 to 1,001. Where the way I would run it, if we're up 10x, I'm risking 10 times what the initial equity was. So I don't know why he likes to do it this way. He also likes to normalize the drawdowns to 99. I personally like to normalize the drawdowns to 50. That doesn't mean I risk 50%. It's just when comparing strategies, here's a 50% drawdown versus a 50% drawdown. How did it do? Recover rate is the maximum amount of time between all-time highs for the portfolio. So 234 days between maybe like all-time high here and all-time high here. Now, what's interesting is for the last 2 months, it's actually showing a drawdown where I showed you guys in my account. I'm not going to show it right now. It's not necessary, but my account is up over the last 60 days. And the reason why is the way we've had bots trading live so far is trading on BitGet perpetual futures and looks at all 140 or so altcoins as tickers on there. However, we've talked where if we bring this to market and we bring people in and we're hugely successful, we would expect that our bots are managing millions of dollars of capital. And we don't want millions of dollars of capital running on the some obscure 140 market cap, low volume perpetual future. It Even though it works now, it could break things. So I said, why don't we limit it to the highest volume coins? So all the backtests you're seeing are not covering the whole space, but only the top 30 volume altcoins. So the performance that you see is is different from the performance that I'm getting, but it's more sustainable because I think you can imagine if we're hugely successful, which over the coming years I expect we will be, and we're managing millions, tens of millions, $100 million of capital, however big it gets, it's going to be more sustainable to focus on the higher volume coins. So right now we have 13 bots. I'm going to explain the general strategy, and we're going to talk about individual bots and then new bots. But it's based on fundamental ideas, backtested, that tends to work. So one of them is I want to be long only on Bitcoin on a high time frame and have a lot of exposure to that. Another one is when alts shoot up to absurd prices, I want to sell those alts. So there are several strategies that are short only for altcoins out of the 13. And there's 4 strategies that are long only on Bitcoin. So when we're calling it Crypto Hedge Pro, the edge is also in hedging where you're trading some of the strategies are short and long at the same time. Often it's short and long at the same time. There may be the way it's in my account is over 100 trades running at times. Maybe 40 of them will be long, 60 of them will be short, depending on the different tickers. Um, and then a lot of the trades are based on perpetual futures funding data. This is what makes our bots really unique and also makes them more risky is perpetual futures is a relatively new product. It's only like 5, 6 years old. So most algorithms are trading on Forex or they're trading stock options or they're trading futures. And these products are 30, 40, 50, they're very old, many years old. We're trading something that's brand new, where there's not a lot of institutions in here, and we're trading on new data that other people aren't. And a lot of that data is we're trading the funding rate and we're trading divergences in volume between perp data and spot data. We'll get into that in a minute. I'm not going to tell you exactly what it is, but here's bot number 1, which is this is an altcoin only short. It shorts failed breakouts. Recover rate, I don't know if this is days. Does that make sense? Here, yeah, there's some weird things we're still working on because it says max drawdown of 24, but the scale stops here at 15. So how could that be so? Um, doesn't make sense to me. But you can see over time it's been positive. This isn't the 7-year data set. This isn't the best, and it hasn't taken any trades in the last uh, couple months. Although in my account it has again, because this is only showing 30 tickers, and mine's trading 140. And generally, if you want to trade weaker alts, you want to short alts, you do want to short weaker ones. But okay, so this is bot number 1 is alt only short. Bot number 2 is, and some of the bots are not as good as the other bots. Some of them are going to be turned off. This one, the recover rate is, that doesn't seem accurate. 7470. If it's going by days, that doesn't even make sense. So I guess I'm incorrect about what recover rate means. It might be 4-hour candles because it looks at 4-hour. I'm gonna ask him. If so, it would be 20. Uh, it would be divided by 4, right? So 20 divided by 4 would be 5 years, which looks like it makes sense actually. So if that's true, then the recovery rate at the beginning, which is 236 or something, would be about 60 days, which is good. So the last 2 months, it's been kind of break even. So some of them don't trade here in the first couple years because perpetual futures didn't exist then. Some of them didn't trade in the last couple months because there's certain filters that cause them to not take trades. But this bot is trading volume divergence on spot and perp. And what it might mean is if there's a lot more volume on perpetual futures than spot, it might be a bearish, it might be bearish, for instance. Bot 3, this is one of the best bots. I mean, if you look for a drawdown, here it says, I'm gonna have to ask what the max drawdown is. But here on the chart, you see it's a little over -20. To be up 120 in 5 years is pretty good. Last 2 months, yeah, this one is one that performed better with 140 tickers. Interesting. But yeah, I see bot 3 is another spot per. Oh, this is a funding rate trade. So if the funding rate is positive or not positive, um, or negative, I might take a trade. And I like these because these trades don't look at the chart for a trigger, where most people are looking at the chart, it's looking at some kind of obscure data. So bot number 4, this is a spot per price divergence and volume divergence. So this would be when funding is positive and there's CVD divergence. This one looks pretty good, right? I mean, depending on where you start it, you might see a lot of drawdown. And the last 2 months it hasn't done much, but about 3 months ago it had an insane run, which sadly is before I turned on the bot in my own account. So bot 4, bot 5, spot per volume diversions with trailing stop loss. So a lot of these are similar strategies, but are just a little bit different. This one's been positive in the last 2 months. Um, Looks okay. Bot 6. So here's another spot per volume divergence. I'm not sure what the conditional close is. But basically a lot of the altcoin, or a lot of what it's trading is funding rate and CVD divergences. This one's showing losing, which is interesting because with 140 tickers, it was showing winning. So if this is no good, we'll turn this one off. No worries there. Bot 7 is another funding rate. This one looks really great. You can see it's like no initial drawdown, pretty smooth. And this one has been carrying heavy in the past 2 months and made a lot of money on the dump. Okay, now bot 8. So this is so bots 2 through 7 right now are all trading perpetual future data. Bots 1 and 8, yeah, bots 2 through 7 are long and short. Bots 1 and 8 are short only on altcoins. So here, this is a breakdown short, and yeah, this is what it looks like. I think it's performed. This is another one that seemed to have performed better with 140 tickers because I don't know if it's been profitable, but it's taken trades in the last 2 months outside of the top. In my account, it has at least, anyways. Okay, let's look at this one. Is another um, this one is another price action one that's long or short on moving averages. Like if something's extremely far away from the moving average, it'll long or short. Trying to catch tops and bottom. Actually, I think this one is only. I think this one was long only, if I remember correctly. Not sure. Okay, now we got into Bitcoin bots. So there's 4 Bitcoin bots. This one's long only on breakouts. This is a great looking bot. You see a lot of the time it doesn't trade because there's not a breakout. Over the past 2 months, it's in a drawdown because Bitcoin's actually down the past 2 months. As of recording this, bot 11 is long only trend following using moving averages. This one's uses a little bit shorter time frame to follow, but part of it is the fundamental of long exposure, and part of it to Bitcoin. Part of it is I want to remove myself from crypto trading. I want this to replace me entirely. So I won't invest in Bitcoin I'll do it through the bot, and the bot will manage that and manage my risk with the altcoins as well. So yeah, this one looks pretty excellent. Bot 12, another long only breakout. This one's a little bit different. All the Bitcoin strategies are down in the past a couple months because yeah, Bitcoin has been sideways to down. And this one's a long only dip buy. So, couple things. What I want to add. So the strategies that I'm requesting higher to add. One of them is um, extreme changes in open interest, particularly dip buying. When open interest has an extreme move, like there's a massive, massive liquidation to buy. So that's one I want to add. And then another one I want to add is a Bitcoin market maker system. That would be trading short-term ranges where it would look at fair value gaps and it would trade fair value gaps back and forth. And it would look at age of gap. So if price starts trending, it would automatically turn off because if price is at an all-time high, there's no fair value gaps to short. If price is at an is breaking down to old lows, the old fair value gaps are phased out. So those are two bots I want to add. As far as when we're bringing this to market, a goal would be to do it by the summer. There's more work to do and make things better. As we might be ready sooner. As far as pricing, I don't really know. The truth is that from what I've seen is that similar products in this industry cost anywhere from one to like $40,000. I'm seeing competitors charging $20,000 for a product like this. And I think we could, considering that it's really something really unique and different. It's non-correlated. However, I don't know that I want to charge that much because it means like a lot more hand-holding, sales calls, higher expectations. So I'm thinking of we'll price it at like, I don't know, $1,000 a year, 500 to $1,000 a year, and 2,000 to $5,000, $2,000 to $4,000, maybe something like that. Although that said, like it has drawdowns. We can't, I'm never gonna say like expected returns or you expect to make 10% in a month or something like that. The thing goes up and down and sideways. So yeah, watch this space. I have a link down below as well to sign up for more information on the bots when they're ready. So go check it out and I look forward to talking to you guys soon. Much love. Peace.